please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Our top focus at this hour, a lookout circular has been issued against Deepak Kochhar and Dhoot in the alleged ICICI Bank Videocon Nexus case. The circular, remember, aims to prevent the duo from flying out of India without informing the concerned authorities. Utkarsh Chaturvedi, who has been on top of this story, joins us now with the latest developments. Utkarsh, take us through what you've picked up.
So this is a classic case of once bitten, twice shy here. Now remember that in the case of Nirav Modi or say Mehul Choksi and earlier Vijay Mallya, the government had to face a lot of flack when it comes to both of the, all three of them really flying out of the country. And that is precisely why the government has gone ahead and issued a lookout circular against Venugopal Dhoot and Deepak Kochhar. There were reports about a lookout circular against Chanda Kochhar as well, but we can confirm from our sources in CBI and Ministry of External Affairs both that there is no lookout notice at this point of time against Chanda Kochhar, but against Deepak Kochhar and Venugopal Dhoot. Now, as I said, the government is really wary of the fact that it had to face a lot of flack, given the fact that all these three people which I mentioned had flown away, and that is precisely the reason they have gone ahead and issued these lookout circulars. Now, what that means is that both of them cannot really go ahead and fly to any other country, so they'll have to be restrained in this country so that any investigations which is carried on against them does not get hampered. So this is what we're picking up at this point of time.
All right, Utkarsh, thank you very much for bringing us up to speed in that ICICI Bank Videocon Nexus case. But it's day 3 and Rajiv Kochhar has been called by CBI for questioning again in the ICICI Bank Videocon case. Remember, Rajiv Kochhar was quizzed for over 9 hours yesterday. CBI investigation shows that ICICI Bank mandated Avista to restructure foreign currency denominated debt and to restructure deals worth over $1.5 billion for 7 companies over 6 years. Now on to the latest in the Nirav Modi Punjab National Bank fraud case then. Former RBI Deputy Governor H.R. Khan has also been questioned by the Central Bureau of Investigation yesterday as the agency continues to probe the nearly 13,000 crore rupee fraud at Punjab National Bank. In fact, we spoke to the Secretary of Financial Services yesterday at the India Business Leadership Awards. He said that the current developments in the banking space is a learning time for both public and private sector banks. Listen in.
It seems like there is a move from public sector to the problem shifting to the private sector as well. How concerned are you about that, sir, in specific? I mean, you've got a government nominee on the board of ICICI Bank as well. What do you make of that situation?
See, the entire financial space, the public sector, private sector, both have very important role to play. And more than that, you have NBFCs, you have microfinance, you have financial inclusion. So a whole lot of financial space. I see a very distinct role for both to exist them in a right environment so that you have proper competition. And it's a good time for both. It's a learning time for both.
And staying with the headlines from the banking space, we learn from sources that lenders of Binani Cement are set to meet today to finalize their decision before the Monday hearing at the NCLT. Remember, Kolkata NCLT had asked the banks and Binani Industries to arrive at a decision on the settlement offer by the 9th of April, which is this Monday. Binani Industries, we understand, is believed to have offered 7,268 crore rupees plus interest dues for settlement so far to the bankers. But sources say the lenders have sought 750 crore rupees in cash deposits and 7,250 crore rupees in bank guarantees for any settlement to be considered. Now on to action from the Wall Street then. The Dow plunged over 550 points to end the week in red over fears of a trade war. This after the US President Donald Trump threatened to impose additional tariffs worth $100 billion against China on Thursday. CNBC's Josh Lipton gets us a report from the US markets.
For CNBC TV18, I'm Josh Lipton. Fears of a trade war impacting the markets. The Dow losing 572 points, with all 30 stocks in the index posting losses. The S&P down 58 points, the Nasdaq off 161. The Chinese Ministry of Commerce announced today that China is fully prepared to retaliate against any additional tariffs imposed on their country by the U.S. This comes after President Trump proposed an additional $100 billion in combined tariffs aimed at China late Thursday night. It's the latest shot in what many on Wall Street fear could turn into a full-blown trade war between the world's two largest economies. A weak employment report didn't help stocks. The U.S. economy adding 103,000 jobs last month, according to the Labor Department. That was well short of expectations. U.S. unemployment coming in at 4.1%. And Facebook is taking the next steps in its crackdown on fake news, requiring more authentication for users who want to buy political ads. Prospective buyers will now need to confirm their identity and location, and political ads will now come with labels saying who bought the ad. That's the action from the U.S. market. Now back to you in Mumbai.
Now back home, after a bumper rally on Thursday, markets consolidated and traded in a tight range on Friday. The Nifty traded mostly in the red, spiked in the last hour and closed flat with a positive bias. The Sensex closed with gains of 30 points. The broader markets also slightly outperformed, with banks and mid-caps gaining 0.5% each. Now, speaking of equities, long-term capital gains tax rate may be hiked if the government brings in indexation. That's the word from Finance Secretary Hasmukh Adhia. Remember, he was speaking at CNBC TV18's India Business Leaders Awards yesterday. Listen in.
Now, one thing in the LTCG regime which we have given so far, we are saying 10% flat, whether you sell your shares after 1 year or after 7 years. Now, that's a bit unfair. We have to, at some stage, bring in indexation. Now, if we bring in indexation, then we may have to sort of bring the rate of LTCG a little bit higher in order to give indexation. So, ideal thing should be, if we are having, say, for example, 20% capital gain tax for all other classes of asset, for this one also, for equity, listed equity also, we should bring it to 20%. For unlisted, for listed, for real estate, for all other classes of assets, it should be the same percentage over a period.
Now, inflows into equity funds have seen a sharp fall in the month of March from over 16,000 crore rupees in the month of February. March inflows have dropped to just over 6,600 crore rupees. Now, what could be the reason behind this fall? Prashant Nair joins us now with a quick analysis. Prashant, are mutual funds losing their flavor?
Inflows into mutual funds have dropped. Equity schemes have dropped quite a bit in the month of March. March is typically a pretty strong month because people put in money because of tax-related purposes. So this contrast is even starker in the month of March. Take a look at the numbers. The first one is equity, pure equity funds, which is equity plus ELSS. The number has dropped to 6,700 crores from 16,000 crores plus in the month of February. I mean, this is the lowest number in March that we've had, at least for a year. I guess a lot more than a year. You can go back and check the history, but this is a pretty low number. Look at the balanced fund number. Many include this with the equity scheme because, 50-60% is in equity, in balanced funds as well. But to put it separately, balanced funds are doing a lot better, 6,700 crores plus compared to 5,000 crores that we saw in the month of Feb. So what really happened in the equity category? That's the biggest equity, the pure equity category. And for that, you'll have to look at the granular data. Take a look at pure equity, ELSS equity and balanced funds separately. In all three, what we've seen is that gross inflows continue to be pretty strong. Gross inflows essentially includes, you taking money out of fixed deposits or other asset classes and putting into equity. It also includes, switching from one scheme or another fund house. It shows that number as well. So what that number shows is, in all three categories, the number there is an increase. So in pure equity, it's up 21%. ELSS equity, it's up 94%. In balanced funds, it's up 51%. But what has happened is that redemptions in all three schemes have gone up a lot more. At least in two of the three schemes, redemptions are higher than the gross inflows, and that's really the problem. I spoke to mutual fund industry experts, and they believe this is essentially a result of tax-related selling, the LTCG tax, the 10% tax which was imposed, that resulted in this particular redemption number that we saw. And they're hopeful that gross inflows remain strong, and that trend will continue, and net inflows will again look healthy starting the month of April in FY19. Back to you.
India has started its hunt for 110 fighter jets. The Defence Ministry has issued an initial request for information to global aviation companies. With this, the ministry has set the ball rolling for a multi-billion-dollar Make in India project to produce fighter jets for the Indian Air Force with foreign collaboration. The government is very comfortable with the RBI's policy and stance. That's the word coming in from Economic Affairs Secretary just 2 days after the Reserve Bank of India announced its status quo policy. Speaking at the India Business Leaders Awards, he also said that bond yields could see a further reduction.
The bond markets clearly seem to be buoyed by the fact that it was a dovish policy that we saw the Governor Urjit Patel put forward yesterday. What's the outlook now as far as inflation is concerned, and what's your own assessment of the fiscal consolidation roadmap, because you've recalibrated your borrowing program, giving people hope that you are going to stick to the fiscal consolidation roadmap?
I don't think this is a dovish policy. It is a realistic policy.
It's a realistic policy. It's not a dovish policy.
And very realistic assessment of the inflation situation. Very realistic assessment of the growth position. And therefore, what RBI has put out yesterday is something which we are very, very comfortable with. You refer to the bond program. What we decided for the 6 months is actually not cutting short the program. We are evenly spreading the program in both the halves. So when we sometimes see that 48% of the borrowing program is what has been announced, if we take out the 25,000 crores by which we have actually reduced the program, what we have announced is about 50% of the total. So there is no backloading, there is no front loading. It's a very balanced, equally paced kind of program, and you saw the effect of that. And we have also aligned our issuances to the market demand. So we have spread the bonds across the different maturity spectrum, so that the issuance is meeting the demand as well as an even paced out, overall reduced program. And also this inflation outlook which has been put out, growth good. I think we should have a reasonably priced, which is what is already you see.
Yes.
And maybe there is some further reduction in the bond yields going.
Now, speaking of the Reserve Bank of India, India's central bank has increased the FPI investment limit in government securities. In a notification, the RBI said that the limit for FPI investment in government securities would be increased by 0.5% each year to 5.5% of the outstanding stock of securities in FY19 and to 6% by FY20. Now, this increase means that foreign portfolio investors can invest about 59,000 crore rupees more in government bonds in just FY19. Now on to an important update catering to the salaried class. The Income Tax Department has notified single-page return filing form for the assessment year 2018-19. But it is not as simple as was being expected, as the amended forms are seeking more information from the taxpayers. And just what is that information? Timsy Jaipuria joins us with more details on this. Timsy, has a new ITR form made filing returns a little more tedious for the assessees?
Yes, as you rightly mentioned, it is going to be a little more tedious for you and me, as taxpayers will have to disclose salary breakup, giving details about allowances that are not exempt from. Also, taxpayers will have to disclose prerequisite value and profit for salary and deductions under Section 16. Not just this, while ITR 1 can be filed by salaried taxpayers with income up to 50 lakhs and one house property and the interest thereof, the taxman has given a breather also. This time, the taxman has done away with the column to disclose cash deposits made immediately after demonetization. Also a benefit for senior citizens, as 80-year-plus taxpayers earning up to 5 lakhs can fill ITR 1 and 4 in paper forms. However, for all the other taxpayers, the normal procedure continues of e-filing. Now for NRIs, a separate form has been notified for NRIs. They will not have to file returns through ITR 1. They will have to file ITR 2. NRIs can also provide details of foreign bank accounts to claim credit or refunds. However, NRIs now do not need to mention each and every account that they hold abroad. Apart from that, for businesses, it's mandatory to disclose income from property. Small businesses will have to report their GST identification number and turnover reported under the GST returns. Not just this, businesses with less than 2 crore turnover do not have to maintain books of accounts. Businesses with less than 2 crore turnover can also now submit their tax based on a certain percentage of turnover of the business. Taxpayers will have to mention their GST identification number and put it in ITR 4, claiming presumptive tax. So very clearly, it is a huge lot of a success when it comes to tax evasion, as the income tax department and the indirect tax department now would tally your ITR 4 and ITR and the returns filed under GST. So all in, the entire process for you and me is cumbersome, but yes, a lot of breathers also.
For artisans engaged in traditional arts and handicraft in the run of Kutch, the world has changed. Survival is no longer about selling products to tourists who visit. It's also about catching an entire universe of customers who are more comfortable clicking on buttons. CNBC TV18's Dhoot reports that many have jumped onto this new avenue with gusto.
You can't not be an artist if the white sand of the Great Run is what you wake up to every single morning. But if you live in Kutch, it isn't just enough if you're a craftsman. And that's because selling handicrafts in this sleepy little town is quickly changing. Let's find out how. 52-year-old Abdul Ghafoor's family has for generations been Rogan artists, practicing a near-dying art form native to Kutch and handing it down from generation to generation. Ghafoor's art has been presented to prime ministers, visiting dignitaries and diplomatic hosts like President Obama.
जब पीएम बनने के बाद अमेरिका के दौरे पे जा रहे थे तो उनके पास सारा डिटेल था, उनके पास नाम भी है, वो जानते भी हैं कि रोगन आर्ट करने वाले कौन हैं, तो उनके ऑफिस से ही मतलब उनके सचिवालय से ही मतलब डायरेक्ट फ़ोन आया और भारत की ओर से जो अमेरिका को गिफ्ट करना था उनमें से खास करके रोगन आर्ट को हमारी कला प्रेजेंट की थी.
But with tourism taking a hit over the last few years, Ghafoor has been one of the first to turn to a new sales medium, the internet. The Kutch region alone is home to thousands of such artisans, craftsmen and block printers who now want to move with the times, or in other words, take their traditional businesses and move them to an online marketplace. 45 artisans in Kutch alone have registered as sellers on e-commerce portal Amazon. They now hope to sell faster, 24 hours a day, and eliminate middlemen. One big draw is that while the site takes an 8% commission, the artisan is allowed to fix prices. The other, of course, is a much-needed spike in sales.
मैंने Amazon पे रखा, उसकी वजह से मेरा होम से तो सेल होता है, घर से तो होता है. जैसे कि ये Amazon वाला सेल है, वो अलग से मतलब हुआ, तो मतलब और बड़ा.
Offline we say 60 pieces per month, like different saris, dupattas and stoles. But in online we are expecting 200 pieces to 250 pieces per month.
The hope is that online sales will double earnings, especially by enabling sales in the off-season. But this also means these artisans have to stock up on inventory, and that's keeping a lot of them pretty busy. In Kutch, June Sanad.
With that, it's a wrap on this edition of Business Saturday. But before we go, we leave you with images of India Business Leadership Awards ceremonies held by CNBC TV18 last night.
Ladies and gentlemen, and welcome to CNBC TV18's 13th India Business Leader Awards.
Young Turk Startup of the Year. The Entertainment Leader of the Year award to Ranveer Singh.